Another check on shares of Netflix, down about 1.5% in overtime, but well off the lows. The company's saying its ad tier grew 34% over last quarter, but saying in its shareholder letter, the near-term challenge is that, quote, we're scaling faster than our ability to monetize our growing ad inventory. Joining us now is Mark Zagorski, CEO of DoubleVerify. DoubleVerify is one of Netflix's partners in its advertising tier, responsible for fraud protection and verification. Good to have you, Mark. So give me your take on the situation. It certainly sounds like Netflix has more space to sell ads than it has buyers at a price that Netflix is willing to charge them. So what does that mean for the velocity in growth of this business?
Yeah, I think you nailed it there. Really what they're saying is, look, we're doing well, but we've got more to sell. And I think they're making some moves around getting in a place where they can sell through better. They announced some relationships recently with some programmatic technology companies, specifically Magnite, to help them move more inventory, not in direct sales, but in what's called the programmatic marketplace, which I think is a smart move for them, right? They've got a lot of volume. They're growing nicely in subscribers and ad-supported subscribers now, looking at 40 million plus in that tier. So now it's about monetization, and this is a new game for them. There have been players out there who've been selling ad space across TV and TV-like networks for years, and they've been doing this for only a handful of quarters. So there's some work to be done. But the good news is they're showing really solid progress on the subscriber growth. I think that's impressing everybody.
Yeah.
They've been able to maintain CPMs pretty well as well.
Talk to us about the trade-offs and the difficulty here for Netflix in really charting this out strategically, because it seems to me like, yeah, they could take in a lot of ads if they wanted to, but if they're trashy ads, if they don't really meet the consumer where they are, and if they aren't appropriate to the program that the consumer is watching, that actually ends up hurting Netflix, not only in the long term, but maybe even in the medium term. So what's the needle that they have to thread to do this right, both on that score in the long tail, and also making sure that fraudulent activity doesn't happen in the ad space?
Yeah, they really do need to balance the quality of the experience with the monetization of the experience, right? And what that means is relevant ads that are distributed relatively equally across the program so that people aren't saturated with ads and they feel like it's a good experience for them. The great news for Netflix is they have tons of data on their consumers and on the subscribers. They're probably the best in the business with understanding with the details of what their users have been watching over the last few years. So that means they can tailor those ads to those consumers, their specific demands around the kind of content that they're around, and that's a good thing. So they can balance that experience. The challenge is going to be, and this is a whole new world for them, is they're not just competing against other streamers in the space, the Disneys and the Amazons of the world, but they're competing against other technology companies too that are vying for those consumer ad dollars. And folks like Facebook or YouTube. These are new players, and they're new to this space.
So Mark, if we just look out over, to use the term that Netflix used in its release today, the medium term, what does a fully ramped, ad-supported model, what do those economics look like for Netflix as it does go through this transition?
I think when you look at the opportunity there for them, it's going to be the fastest growing, I think, revenue driver as a percentage of their revenue moving ahead. Now, the numbers are still relatively small in comparison to their subscriber revenue, but advertising revenue is really profitable, right? You're able to actually drive really high margins out of that ad revenue. I think they're going to continue to lean in on that. Not just due to the fact that, it's a nice additional line item, but it allows them to penetrate markets and market segments, not just of consumers, but global markets in which the price point is too high and consumers have reached kind of subscription fatigue of paying a full loaded Netflix ad subscription or non-ad supported subscription fee.